So this video, I'm going to do a video of me updating the evening equity insights for Tuesday, April 2nd. If you go ahead and look at the link below, you'll see that I do have one from the 26th as well. It kind of gives a breakdown. If you're interested in this and you like the video, we do give a 1 month free trial. Now let's jump right in. I did actually update already a little bit. I kind of got ahead of myself. I'm going to go ahead and look at IWO now. I do like small cap growth. Small cap growth is in a great spot. Yesterday was in a great spot. Today it's in an even better spot. I love that it's down that far. What is it? It's only 1% away. Oh, that's such a great buy. I'd be looking into that for going into the rest of April. Look at value here. Oh, by the way, you have no idea who I am. I'm Dustin. I run Bootleg Macro. One of the things that I do enjoy about this is that I built this Chrome extension for myself actually, and I did it because if you've watched any of my previous videos, I have a model that I love that's in this exact same spreadsheet, but I get concerned because I don't necessarily trust Google as a data provider, and I have a better data provider. So I needed to turn my model into something that was lightweight, portable, and super useful. So I couldn't have all of the same characteristics that I was like tracking, but I did find the things that matter most to me. I want to see relative to where the price is in its trading band, which if you know the colors, like light red means it's 2 standard deviations, 2 standard deviations, 3 standard deviations, 3 standard deviation plus. This is in the normal range in the green, and then there's blue that goes along with it, corresponding. The big thing then is going to be what's going on with the volume, which I do have the same probability ranges on the volume, and you can see based on the color coordination, and then I do have the daily sentiment, bullish or bearish. Look at the 20-day rolling average, and then I can see the range itself. I look, primarily the most important thing to me is going to be the actual sentiment, and then the range, is it higher or lower? Is it a higher low, or it looks like it's been a while, or is it a lower low? As well as for the highs, is it a higher high, or is it a lower high? Those are important characteristics to me. So for me, I built exactly what I need, and that is all that I need out of this tool. But since I don't have a proper developer just yet, because I'd like to be able to pay for a good one, because I coded this myself, but I'm never going to be the best developer in the world, and I know that. But I do know how to code, and I know how to be able to at least get things out the door. I wanted to deliver this, and I wanted to build it with people who are interested in building it alongside me in the sense of supporting the vision, supporting the dream, and supporting tools for traders. I want to make tools for traders. I like making tools for myself. I like making models for myself. I don't think there's any reason why things should necessarily be locked away in some ivory tower for a bunch of like hedge fund traders or managers or anything like that. I think the cost of people getting access to tools, I think the education is just, it's not healthy for people the way that it's currently set up. And I think that this tool is made for a person who's a lot like me. You have a regular job, you need something at the very end of the day where you can look at a few different tickers. You don't need to be overwhelmed by all the charts and what all the indicators are. All you need is a proven system that you feel comfortable with, that you like. And I like this system. I like it for myself. A lot of people have said that they like this system. It's incredibly common if you think about like a Bollinger Band, or you think about the range that stocks will kind of trade in. People use moving averages, they're paying attention to volume, they're using VWAP, they're using all these exotic indicators. There's no reason to think that it's any different than this. Like, let's say what we were just looking at. Let's say we were looking at, the next one we're going to do is FXI. Essentially what I'm going to do here is show you exactly how this breaks down. So FXI today was up, nice. It was up 20 cents today. The big thing that I'm going to look at is, so we're already bullish. We know we're bullish. So look, the rolling average went up a little bit. That's good. And then what did we get? We got a higher low, which is super important. And if we look at the range from 22.92 to 22.97, and then the top of the range from 24.82 to 24.87 and a higher low, that's significant. Now, if I go ahead and look at my actual original model here, this is fantastic. But first off, what you'll notice is just how long it takes. I can go ahead and search for FXI again and get the data returned from here before it even returns through Google. And it actually updates the entire model. That was what I was talking about in terms of one of the concerns that I have specifically to Google. Now, if we look, what do I care about? I care about where is the price close. So if we look, and I'm going to go through this real quick because I think this is important for you to understand the most important parts of what you're getting if you're thinking about what this model is. So if we go to FXI, you're going to see that the 2 days here, we have red background with black lettering, very similar to that. You can see here that we get these days where we were above 2 standard deviations, or we were 2 standard deviations or 1 standard deviation above. Very similar to what we had on the 11th back there. We're paying attention to what was bullish. The most important part to me is I took the bullishness from the longer term as opposed to the shorter term. The reason I did that is because I wanted it to be able to be more reflective of longer term trends. I do have it so that This is an updated version because I believe I'm doing, I don't know if I'm doing 17 days or 23 days. I forget because I coded it a little bit ago, but I wanted, and I believe that the only way that you believe in this flip here from the bullishness is if you got, or from the bullishness to the bearishness is if you got two directly in a row. So here you get bearish, bullish, bearish. I won't believe that. What I'll believe is when I go from this, when I'm bearish and bearish, and I've been bearish for a while since here, when all of a sudden I get two bullish in a row, then I believe it's time to go. So that is how I view it. If I'm looking at the rolling 20-day moving average, I think it's valuable to see, especially as it's rising. And then the most important part to me is that we have got, if we look at the range here, we are looking at the, let's look at this. So this is how the range will get, there's some concoction of these numbers here that end up turning out. So we would have 2297, which is at the bottom. You see at the very bottom here is 2289. I've updated it to make it a little bit more tight and more respective to the volatility itself. Or you can see 2487, where here you'd see 2409. Now, if I go ahead and look at the actual card here, it's going to be more like honest. So if let's look at this, FXI. The top of the range is going to be at 2487. The top of the range here is 2489. The bottom of the range is 2297. The bottom of the range here, in with the way that I would respect it, would end up being, you could see 29 or 2345. 2297, the volatility is definitely increased. But this is essentially what I look at. I look at the way that the volatility is moving, the way that the price is moving, the way that the price is expanding in the second derivative. And then the most important part is the top of the range rising and is the bottom of the range rising as well. That's what is inside of this individual indicator. The most important parts of this entire model are all right here. That's why I update it every single night. As well as it is for you, it's really good for me because it keeps me in sync with the market. It helps me as somebody who has a regular job just pay attention to what's going on without taking too much time, not staring at charts. There's nothing wrong with staring at charts at certain points in your life, but if you've got a really good job and you have a nice skill, and why wouldn't you just invest in getting better at that? I mean, I like to follow the market because it's an interesting hobby, you know, but I don't do it professionally. So for me, this is just an extension of something that I can pay attention to, which is not related to work. Similar to like a video game in a sense. Like you don't have to take action every single day. It doesn't necessarily do anything for you, but it gives you an opportunity to kind of pay attention to something interesting. People do with sports or politics or hobbies like knitting, gardening. So yeah, that's why I love this. Oh, it is amazing to see what has been going on in silver, isn't it? Silver's having themselves a run. And if I just look at what's been going on, silver's been incredibly bullish since the middle of February, right? It essentially flipped bullish on the 20th when it was at $21. Then we continue to get higher highs, which I love. I see anything, if it's a higher high or higher low, it doesn't really matter to me. Getting both is great. Already at $23 only a couple months later. That's the power of just, in my opinion, being able to pay attention to the market every single day, follow along, and have a process that is at least paying attention to the underlying second derivatives of what's happening. So interesting what's happening with Bitcoin. So interesting what's happening with Bitcoin. There's quite the pullback right now. I will be serious about that. It's quite the pullback. ETH has been in this pullback. That's what's interesting too. ETH has been feeling this. ETH really pulled back earlier in the week. Now let's look and see what we have with Apple. Apple, it's been bearish for a while. It's been very bearish for a while. I think when I initially saw it as bearish, longer term, I think it was back in August. It's been really, really bearish. Back in the summer, back in August is when I started to flip. When it was around $181, I really took note then. It's essentially been whipsawing back and forth. And if you look at where we are now, we're at the lowest low we've been at in months. Not great for Apple. Apple is, as a company, just one of those ones that everybody's just so comfortable with because it's led for 20 years. 20 years that thing has been essentially one of the leaders in the US, and now falls by the wayside as we enter a new era of computing. Let's see what we got going on in Salesforce. This one was interesting because it did kind of fall. It's underneath its 20-day moving average. It looks like it's trying to fight back. It's, again, I talked about it earlier, but we don't see two confirmed bears next to each other. So I'm going to be very curious what happens tomorrow in CRM. I'm going to see more bearishness as of today. But if you looked at the market overall today, the market was generally down. Generally, it was down. I think if we're being honest, NVIDIA is very, very... You notice that we see Salesforce and NVIDIA all underneath their 20-day moving averages. Just not the type of look you'd expect from a leader. How did Meta do today? Meta had a decent day. Meta fought back. Meta's been fighting back, reclaimed above its 20-day moving average. Great sign. Let's see here. We've got Goog. Google's really reclaimed. It's really fought back. There we go. Now if we look at Microsoft. Microsoft continues to just show an interesting look. It's not negative as much as it's not positive. like for one of the stocks that people consider to be one of the actual leaders, and I truly believe wins no matter how AI wins because it's essentially going to be the infrastructure. Just really, oh, I went to Tesla. Oops. Oh, I did. That's on purpose. Yeah, Tesla, having a very bad day. If you have watched any of my other videos, I did do one on the 27th, or no, the 25th. So right here, the 25th of March. I did do a video specifically on Tesla. You can go ahead and check that out, unveiling Tesla's trends, insights, and analysis. I was not very positive on Tesla because there's no reason to be. The stock looks terrible. It's not, I don't have an opinion of anyone or anything about it. I think it's quite an innovative company. They've had great products for a long time. Just right now, they're out of favor and no one wants to buy that. No one wants to buy that company. Whew, what happened to you today, UNH? Whew, I mean, I've been saying short this thing. And wow, you had the worst day out of every single stock on the entire market. You are below your trade range. You're below your trade range. Let's go ahead and just look at this real quick because I want you to see how bad this is. I want you to see exactly how bad this is. If we look at where, wow, UNH, what a bad day. Now you can see how long it takes for this thing to load. Way at the just below the range. Just an ugly day for UNH. That is, I don't wish that upon anyone. That is exactly what happens when you just have risk. There's just risk that exists in the market that is not specific to the, well, it is the company, but just not great. But that's all I have for you today. If you're interested in this, feel free to go ahead and check out the Evening Equity Insights. Again, 1 month free trial. You're going to get all of that updated. What I do every single night, and I'll just kind of show you, what I do every single night is I actually just go ahead and update with the image. This is not the one from yesterday, but what I do is I update it with the image. You're able to go back and review the previous days and see kind of where the charts were or where the stocks were. So I think it's actually really good value. $25 a month. It is 1 month free trial. Let me know what you think. Talk to you soon.